journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, we're going to be looking at the Russell. Remember, we dropped 70 handles down to there. There was your 382 on Friday that we talked about. That's how you come up with the ABCD to the downside last night at 4 o'clock in the morning. And I sent a video out talking about some other things. You can see it went exactly to the exact low right here, and it's rallied 30 handles. I said you put your stop right here, and that's all you can do. You don't know where you go. And you can see here early this morning, it was really quite interesting because early this morning, remember, this was an hour range in here. And what do we look at when the market is starting to turn? Went exactly to the old 382. You'll see it hit there right on the money, hit it twice. And then we've had the big run, and now we're sitting at the 50% level of this move right here. Folks, there's still a chance that this market could take out the highs of Friday and just keep going up and up and up. I hear it so much from people that I guess they're correct, but we'll have to wait and see. Now, another one that we were talking about in the gold market was the gold market last night. Early this morning, and there was a move that we were looking at yesterday, and I said in the market here, I said we had this little triple top up in here, really didn't mean very much, but the thing to watch for was the 382 pullback right here at 51, and of course it hits 51, and it's now trading at 56. You're risking just $5 on that. So that's worked relatively well so far. You can see the A, B, C, D to the upside, and that's all I was doing, was trying to give you some ideas on where I think some of these things might give you a low risk opportunity. Whenever I go for an ABCD pattern, folks, I always give a stop in there. Just like in the cattle today, I said sell the October cattle and risk 1 cent, and it opened on the high and broke $1,400. Now I don't know if it's going to continue going down, but that's the way you would like to see them start. Okay, so let's take a look here at the Dow Jones. Now here's the Dow Jones. Now this is the Dow Jones that we've had here the last few days. As you can see, here's the same pattern that we had here in Dow Jones. You'll watch and see. There's your AB leg right here. There's your CD leg coming down here last night to 4378. The low was 4325. We've had a rally back. We haven't quite. We're above the 382, but we haven't made the 50% like we've had in the. And the S&P's actually made the 61, and this one hasn't quite yet made the 50%, but it's still in a bullish move, and we're up a couple hundred points on the day after being down quite a bit. So it's still early in the day, but we're going to find out what happens. You can see here with the S&P, there's where we were last night. I'll just bring this up to show you. If you like ABCDs, there's ABCD. Let's see how close it is to the real money, folks. There's your AB leg right here. There's your CD leg right there, and it misses it by a grand total. Oh, this misses it by quite a bit. This misses it by, wow, let me see, how much is that? See, 50, this is about 7 points, and now you can see we're rallying back up, and we'll see what the retracement is so far. We're above the 6.8. I know that came in at 06, and there's where we're trading at right now. Very little on the ABCD front, except early this morning, just like with the S&P, you'll notice here that we did right after the market. It's just a second here, get this done. Right after the market opens, see, there's your opening range right in here. You can see here we had to run up, and it pulls back one time, to the 382, and now it's starting to still go higher. So it still has a positive bias in it. So those are the ones that we're watching here today. Even, folks, one of the things I mentioned, I said one of the things that looks like it was wanted to bottom was the corn. And I said, looks like if it makes a new low, on the night, buy it and, put your stop a nickel below. And you'd have got filled sold at 10, and now it's only made $500 to $250, but now you're break even. But there was another ABCD that came right down. I'm just trading ABCDs and putting stops in. That's what I'm doing. And believe me, folks, when you send me an email and tell me that, you're nervous or something like that, I appreciate that. And I like to get them, and all I try to do is to keep you from losing very much. That's the one thing I learned when I was at Drexel. They said, our customers can make money. They're used to that. They're used to losing money. But one thing they're not used to do is losing a lot of money. And if you lose a lot of money, at Drexel back in those days was 25%, then you had to get a new job. So over those few years, I never had that experience. I had a couple close calls. Well, I never had a losing year. I never had a losing year. Doesn't make any difference what I did. That's history. Okay, let's get this out of the way here. And I want to make sure I don't miss anything on this run here. We've got Stan coming up here, and when I get the cards up, crude oil, I've already mentioned to you what we expected here to the downside. You can see it's still coming down quite a bit. The gold is in the ballpark here. The dollar index, if you'll remember, folks, this is the dollar index. And I said, watch this puppy because it looks like it's getting ready to do that. This is what I'm looking at. Now you can see we broke above that line. Okay, that's when they start breaking down in that. Now, so that tells us that we're up 1, 2, 3, 4, 5, 6, 7, 8, 9 days. Okay. Now I've been short the British pound for 9 days, and I've made some money for my folks. So I said I'm going to book some money. Maybe I don't get the high tick or low tick. That I don't care. It's not how much money you make. It's how much money you don't lose, and that's the key. You can see we're really close to this level right here, which is 9786. That's a 61% retracement on the dollar index right there. We start getting above here, but remember now, we're up. This is 1, 2, 3, 4, 5, 6, 7, 8 days up. That's very unusual. I mean, that is, but it hasn't gone very much. It's only gone 1.5. But that's a lot in the British pound, and it's a lot in the dollar index, in the euro too. The euro did the same thing. Okay, now let's move on here. Someone's asked a question earlier about profit objective in the cattle. Folks, I don't know because it just started. I really don't know. I mean, this is what it was looking at this morning, see, because it opened right here. See, there was the open this morning. That's why when I was saying to this is just sell it. I mean, it was I think at the daily, you can even see it better. I mean, it was bang, there was a number. See, the top was in, so all you had to do was just sell it. There was a sell this morning. See, it was just right there. Same thing in the August, did the same thing. And, it's dropped quite a bit. We've taken out the lows. We're down, we're down over $1,300 in profit in that one. So I would be, it's how much money you don't lose, folks. That's the key to what we're watching in here. Okay, the other one that I still have on my watch list that I really like, hold on here, if I can get it up here out of the way. I think I took it off the board because it was the soybeans. I'll cover that here. We've got a break coming up here, and I want to go over a couple other currencies and a few other stocks that people are asking me about, and we'll find out where we are here. Hold on one second, and I will get this up here. Where is it? Oh dear, what have I done wrong? Okay. Well, I'm not going to worry about that. We'll get this out of the way here. We'll be right back in just a minute.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Okay, folks, I just wanted to mention here about crude oil, because this is a substantial move today to the tune of about $2,500, which is very, very unusual. And so I recommended, moving the stop down to 68.60. I would move it down to 67.80. Lock in almost 2,000 is what I would do if you're in that trade. So that's what it looks like. Because we waited on this for so long, folks. This was a slam dunk as far as I was concerned. Look how many days it took. It took almost 2 weeks. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. It took 2 weeks to make the number. The high today was 69.63, and now we're trading at 67.13. The sell was at 69.58. I didn't look at the crude oil or heating oil or anything else, but we're going to try to have Mike Moore on as our guest this week. Stan Harley's our guest today. Tomorrow, I was hoping we would have Bartolomeone on, but he's traveling around again, so not much I can do with that. Okay, people keep asking me, because I've said this thing about the stock market making such an important top, in my opinion. Yes, I still think that's the case. We might make a higher high by just a little bit. I'll be surprised if it does, but like I say, I get surprised a lot. So, but this is all the things that I look for in the market have happened. But it's, this thing is so doggone bullish, because I'll tell you here on the news here, that's it, pretty good. I'm not going to tell the joke. Well, I have to tell this little joke, okay? We have a restaurant here. It's a very socialistic restaurant, but they have a new sandwich. It's called the Trump. I'm not going to say it. I have to, because I said it says a new Trump sandwich. It's 2 slices of white bread stuffed with bologna for $2.99, and the line to get into the place was about hour and a half wait. Anyway, that's what we're watching here this morning here with some of these things. Let's move on here. The pound, you can see it go down. See it goes down lower, folks. When I take a profit in this, I don't feel bad just because I took a profit. I don't know where that low is going to be. I really don't. I could have used a trailing stop or something like that, but to me, that was a time to do it, and that's why I did it. I'm not going to get the highs and lows on these things all the time. Once in a while we'd get lucky, but sometimes you get the high, sometimes you get the low. But what the heck, sometimes you're going to be wrong, and that's why you put a stop in. I had a lot of people, more people than normal, tell me that I was, totally wrong about the market and the crude oil and the cattle and everything else. But I said, yes, that's possible, but I have to do it because these are the patterns that I believe in, and that's what I do. I've been doing that for a long time, and sometimes I'm right, sometimes I'm wrong. I know that I'm right more than I'm wrong because otherwise I wouldn't have any friends left at all. Okay, let's take a look at the NASDAQ. People are asking about the NASDAQ. We've got our good friend Stan Harley, Mr. Bullish himself, will be up here. And we'll get up here with the NASDAQ. 1 second here. There's our NASDAQ. We'll put the 30-minute up and see how much it's rallied back. Oh, boy, it's coming pretty strong. Are we getting ready to make another high? Shut the front door. We are. Oh, my goodness. Look at this. This is really going to make me look bad. We're very close to a new high. Boy, we're not very far at all. This is, let's see where we are here. There's where we are. Yeah, we're above the 786. Yeah, we could easily go here. You can see here we had some ABCD patterns here last night, just from the one we had on Thursday. You can see there's your ABCD right here last night. That was the one about 4 in the morning. See, went down. Couldn't even take out the low of the 7th, folks. That was the first sign that maybe it was getting ready to go, but that's it. Now, this is just one market, folks. This is only 20 stocks, 25 stocks out of the 100 that are triple digit, that go, real expensive, and those are the ones that do it. And, of course, the one above all is, of course, NVIDIA, and we're going to look at that for just a second here before we have Stan come on. NVIDIA, it was one stock, and then, of course, Tesla. We'll get that up here. Here's NVIDIA. Put this 30 minutes. See, we had the new high right up here at 68 this morning. It broke down. Really tremendous break. It dropped $6. And let's see where we went to for the last low. Okay, here was your last low on July 1st. Anybody want to bet the odds on what that number is? Tell me. Please tell me what it is, Billy Ray. Is that a 382? Shut the front door and raise the rent. 61.90. The low was, oh my God, I'm not even going to tell you, 61.90. Anyway, that's what's doing, and now we're rallying back a little bit here with this. Now let's take a quick look here at Tesla. All I know, folks, is when this market does roll over, and when it does roll over, in my lifetime, is going to hurt so many people, you're not even going to believe it. Yeah, you will. Hold on 1 second here. Tesla starts with a TS, and this was up today, as I recall. Yeah, it was. Where are we at now? So here's where we are. It was up pretty good this morning. It got all the way up to 32, and then it backed 332, and then it backed off a little bit right here. That, I don't know, must have been news of some kind, but it's still up on the day. That's a good sign. You see, it's still up on the day, so it's still moving a little higher. We took the highs out here, so that's acting okay. Okay, now let's move on to the foreign currency that I want to talk about, which is dollar yen. This is one that we've been very fortunate to be in for quite a while. We are now flat, and I'll show you why. We'll get this hourly chart up because that's the one we were trading off of. There it is right there. We had this big move off the bottom, okay? There's our big move right here. This is where we exited right here, folks. This is 147 area right here. That was this big move up to the upside. Now it's gone higher by another 50 points, but it's doing it without us because I said this is where you want to be taking your profits, right or wrong. All it did, backed off right to the exact 382 retracement right here. Now I had the choice going back in if I wanted to, and I said, nope, we're just going to hold on and see whether that dollar index can hold above it, and so far it's done that. So you can't get all of them, but remember, this was the big one on the downside. You can see the ABCD pattern, right on the low, baby. I mean, these are the kind you want to see. Look at that. Then you have the higher bottoms. There's your 135. There's your 382 pullback right here. There's your target objective. Bada bing, bada boom. That's what we like to see. Sometimes we get them, sometimes we don't. Here's the one I like, one of the best, folks, and you always want to be scared of me when I say one of the best because those are the ones that give me the most difficulty. This is our soybeans, and we're getting close, folks. I thought we were going to get there last night. Let's get that 4-hour up so we can see it real closely, because it's got all the things that I really, oh my goodness, it did hit one of the ABCDs last night. I didn't even see that. Shut the front door. Oh, it didn't quite get there. That's why. Yeah, it missed it, because the low was, I was looking at 96, and it got the low was, let me see what that low was today. The low was 9 and it doesn't even say 99. Oh, 98 and a quarter. So it missed it by a point. But this is what I'm watching here, is to see if we can get this down, because you've got a really nice 3-drive pattern coming in here at this level right here. I'm looking just a tiny bit lower right here at 992. That's where I said I would be a buyer right there. That's at the 786 of this. Let's get this out of the way here. We'll be right back with Stan Harley, folks. Stay tuned. It'll be good.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out, like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hey, we're back, folks, and I believe we have Stan Harley, the Harley Stock Market Letter, in the house right now. Stan, how are you doing, my friend?
Mr. Pesavento, I'm doing just awesome. Thank you. How's your weather here in Arizona?
Oh, it's about, the high today will be about 65, or is that 2 times 65? Yesterday we hit 108, which is pretty high, but we're in the monsoon, so who knows? But no one goes out after 103 to, till later in the afternoon. So you're basically shut out between 12 o'clock and 4 o'clock, but the other 20 hours are pretty nice. And we have no rain, so it's just really quite balmy right now.
I saw there was a horrible forest fire up on the north side of the Grand Canyon.
Oh yeah, that they have, first of all, they have no water up there, and any of that brush that gets caught, they have to let it burn because there's no way they can reach it. That's pretty tough. But speaking of forest fires, and one that's on fire is El Fuego, the stock market. Tell us what you're looking for, my friend.
Well, absolutely. It would
higher prices, I know, but tell us where.
I'll do my very best. Thank you. Let's just kind of start out by looking at the big picture. This is kind of a recap of what I've talked about before, but I think it's instructive nonetheless for the viewers. This is a long-term chart of the S&P 500 going back almost 30 years. And the dominant lows, as you can see, I've highlighted here on the chart with purple vertical lines. I call this the primary monthly cycle. And over decades, the nominal primary monthly cycle is about 49 months. And many technicians have referred to that as the so-called 4-year cycle. But commencing from the 2002 bottom, that cycle expanded, and I think it threw a lot of people off. And then subsequently, it contracted. Nevertheless, it's part of what I call the family of cycles of this 49-month 4-year cycle, and it expands and contracts by Fibonacci ratios of 1.618 and 0.618. And I show them here on the screen, and I show the math that defines the cycle. It's all based on Fibonacci numbers. The baseline is the number 55 times 2 divided by the square root of 5. And that's the derivation of that cycle. And then when we multiply that by 1.618, we get about 80 months. When we multiply it by 0.618, we get about 30 months. And as you can see, those 3 cycles define every single move we see in the stock market. And the 2 most recent primary monthly cycles have been of the 30-month garden variety. This was the March 23rd, 2020 low, where my mouse is. And then right here is the October 13th, 2022 low. And then the next one occurred on April the 7th, 2025. And that was your garden variety 30-month cycle low. And we're powering higher, and we're right at new highs in the S&P.
Sure.
The next one I believe will occur about 49 months later. Not too complicated, but it only took me about 4 decades to figure this out. But I make it sound like it just fell from the sky. No. School of Hard Knocks and apples hitting me on the head, and expensive bank account. You know the drill, Larry.
Yes, sir.
Seriously, I'm looking for the next low in the summer of 2029. Now, another takeaway from this chart. Take a look at this on the way up from the March 09 bottom. Each of the crests, or the high point in price, every single one has occurred to the right of the midpoint of the cycle. And when that does, I call that right translation, and I've abbreviated that RT. And so here's the high point in this 30-month cycle. It occurred to the right of the middle. That's right translation. The next one, right translation. Right translation. Right translation. The most recent one, right translation. Right translation is characteristic of bull market structure. And when it occurs, it tells us the subsequent cycle is going to be up. And so until we see left translation, which we have not yet seen, we are still in a secular bull market. and we're going higher. And indeed, yes, sir, the S&P, the New York Composite, the NASDAQ Composite have all gone to record highs. The Dow has come very, very close. It hasn't yet, but it will. So I know a lot of folks are fighting this thing, but the math, the cycles, the structure, from my eyes, tells me we're still in a secular bull market and we're going higher. Now, what am I looking for out longer term? I am thinking, and I use this in italics, but I'm thinking the cycle we are in now is going to be characterized not by right translation, but by left translation. So if that were to occur, what would happen? Well, we would need to see the peak occur to the left of the midpoint. So an approximately the 1/4 point in this 49-month cycle. So 1/4 of 4 years is 1 year. So I am looking for the crest, the high point, to occur approximately 1 year off the April 7th low. So that would suggest April-ish of next year, plus or minus, we would be looking for a high, if Stan's theory about a significant high occurring in the current 49-month cycle. And I've got some other work I'm going to share with you here in a few slides on that subject as well. But that's my working theory. But that's kind of a long ways off. Between now and then, we've got lots of bull market to exploit.
And you've been bullish, right? Yeah, you said when we were down there, we were going to go exploding higher, and we've certainly done that.
Yeah, well, truth be known, I didn't really become bullish until about a month after the April 7th lows. But then I saw this past chart. I saw the advanced decline line going to new highs, the strength of the market, and I concluded we've just seen a 30-month cycle bottom, a major bottom in that monthly primary cycle, this right here, and we're going higher and we're going to new highs. And sure enough, we are at new highs. For most of the market indices, here's the Dow Jones Industrials. It is just a smidgy-widgy below the 45,000 line. We have not yet gone to a new high, but I think we will very, very shortly. And, Stan, there's all this threat. Go ahead, please.
The question is, the biggest stock in the Dow was the United Healthcare, and it's in half. It used to be 600, now it's 300. If it were back to where it was, we would be at those levels in the Dow Jones, wouldn't we? At 45, we should have made a high easily.
I haven't done that analysis, so I can't speak
it's not analysis. That's a sophisticated wild guess. Is all that is. Yeah,
here comes the music.
Yeah, we got to pay a few bills. We'll be right back with Stan Harley, folks. Stay tuned.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, we're back, folks, with Stan Harley of the Harley Stock Market Letter. Stan, are you still with us?
Yes.
We have a question about the different markets, like the Russell and the Dow Jones and the NASDAQ. Do you do each one of those separately, or do you just look at the overall broad market with the S&P?
I look at the overall broad market, but I look at what I call the Big Five indices. Okay. And for me, the Big Five are the Dow Jones Industrials, the Dow Transports, the S&P 500, the NASDAQ Composite, and the New York Composite. And to a lesser extent, I look at the Russell, but all the major indices move up and down together. Now, their amplitudes might vary, and there might be divergences, significant highs and lows, but the cyclical turns are the same for all of them.
Okay, that sounds pretty good. By the way, I have a question.
Okay, go ahead, please.
He's not responded, and he's had cancer, but I know he was beating. Have you talked to him recently? Because his phone doesn't work anymore, and so if you hear from him, let me know. Because Peter and I have known each other for 60 years, and I've been following him. He's doing really well. He had beaten it. I just wondered he's okay. So if you hear anything, let me know. Okay.
Oh wow. Yeah, I just saw him a couple of weeks ago at the.
I know you did. Yeah.
Foundation for the Study of Cycles conference in New York. He was looking great. He was feeling good. Ended up a lot.
Yeah, he's a nice guy.
He is super fine gent. Yes.
Yeah. It's hard to believe we grew up in that era 40 years ago there in the Wilshire Boulevard in Brentwood with Conti Commodities and all the meetings we used to have. It was a lot of fun. Tell us about the next chart you're looking at here, my friend.
Absolutely. This is a chart of the S&P 500. And as you can see, the S&P has gone to an all-time high. It's backing off that right now, doing a little back and fill structure, kind of catching its breath here, but I think we're going to be going higher here very, very shortly. This one is a really important chart. A lot of folks probably miss this one. This is the New York Composite Index, and this reflects all of the stocks traded on the New York Stock Exchange, and it too has gone to a new all-time high. So naysayers that say, oh, this market's just being kept aloft by a few high-tech wonders.
Yeah.
The point is the NYA is in all-time high territory.
Yes, sir.
And this is another indicator here that tipped my hand to the bullish side here not too long ago. This is the New York Advanced Decline Line, New York Composite Advanced Decline Line. And this tracks, it's a running summation of each day's net difference between advances and declines. And very early on in this run, this made a new all-time high. And oh my gosh, when that happened, I said, this market's going a lot higher.
Yeah, I remember all the time. Yeah, it just wouldn't back off. It just kept wanting to go higher and higher. So it's been a heck of a move to the upside for sure. We have one other question, and is there any particular stocks that you follow from a personal standpoint or for your service? That comes from someone in Wisconsin's asking that question.
I don't focus on individual equities. I'm a broad market index kind of guy.
Okay, great. That's the answer. Yep.
For trading and investing, I think ETFs that mirror the indices are the way to go, the safest. Spread your money across the S&P, the Dow, the NASDAQ, maybe the Russell. You can't go wrong. Well, no, I don't want to say that. No. Erase what I just said. Of course you could go wrong. Larry Pesavento said that, not Stan Harley.
That's correct.
Here is a chart of the S&P going back a few years. And I found this through an iterative process, but looking at all of the intermediate highs and lows and overlaying that with a Fibonacci ratio template, I found each of the highs lined up with the major Fibonacci ratios of 0.382, 0.618, and 0.764, just by trial and error, utilizing the January 4th, 2022 high as the genesis point. And just kind of moving my tool back and forth, and I found this, and I said, isn't that interesting? So I put the dates into a spreadsheet, did the analysis, and what popped out was a standard deviation of about 2 trading days, an R squared very, very close to 1. 1 would be a perfect fit to the data series, and a cycle length of about a little over 1,023 trading days. It's about 1,026 when I do some other analysis. What that equates to, Larry, is 49 months. 49.2 months. Well, that's the nominal cycle that I showed a few slides ago in our first session.
Yep.
So what's going on here? We have a very clear 49-month cycle defining the highs, and when you splice this by the Fibonacci ratios of 0.382, 0.618, 0.764, it has lined up in the past with all of the major highs. Assuming the pattern continues, I've projected this into the future, and it aligns with the time period surrounding February the 4th, 2026. Now, here's what Stan is thinking. Remember the earlier slide where I said, looking for a top, probably a significant top, first quarter 2026? Well, look at this. 49 months from that high aligns with the first week in February of 2026. That might align with a major top. It might. That's kind of my tentative thinking at the moment. Things might change between now and then, but that looks very, very compelling for the moment.
Okay, we have another question. The Treasury bonds. Do you do any analysis on the? I think the answer is no. But do you do anything with Treasury bonds at all, Stan?
I do look at bonds. I do, and discuss them in my newsletter. Bonds are the most unexciting market right now. They're essentially going sideways. But I do think the longer-term trend in bonds will be down and interest rates will be up. I didn't bring a chart on it today, but the weekly chart, one can see that prices are chopping sideways. The 200-week moving average is coming downhill. And I think in a few months' time, price will essentially rendezvous with that 200-week MA, and that will be terminal resistance. And from when that occurs, we should see a sharp break to the downside, meaning bonds down and interest rates up. But for the next few months, I think it's more sideways meandering here for the bond market.
Okay, that makes pretty good sense. Listen, I want to thank you for being our guest. Do you have anything else you want to add? Because I don't want to keep too much. Please do. Oh, yeah, we got time. Fire away. We're going to take a little break here pretty soon, but continue, and then we'll have the break and have you back on. Stay with us.
We'll get this last one in before the break, and then we'll do Bitcoin after the break. But this last one is a chart I ran off right before coming on the air. The S&P, we've been making lows about every 17 trading days, plus or minus. And the genesis point for this cycle is the high that occurred back on February the 19th. And as you can see, here we go, and I hear the music. The next low is due later this week.
All right, we'll be right back, folks, with Stan Harley. Stay tuned.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
We're back with Stan Harley, and he's looking at the crypto king, Bitcoin. Boy, this thing looks like sky's the limit.
Here is a long-term chart of Bitcoin. We've talked about this in the past, but I thought this would be informative nonetheless to kind of repeat it. This is a log chart going back to 2010. And what I've done here is I found that all of the major highs can be defined by the Lucas numbers. For example, between this high and this high, notice Lucas 29 months, defined that time period. The next time period between these two highs, where my mouse cursor is, was defined by the Lucas number 47 months. The subsequent pair of highs, again defined by the Lucas number 47. And assuming this trend continues, 47 months after the November 2021 high takes us into the last quarter of this year.
Any particular price level you're looking at here, Stan?
I'm sorry, I didn't understand you, Larry.
Any price level, $500,000, $750,000, $1 million, $2 million? What do you think the high will be?
Well, a great question and a little bit of a challenge to answer, but let's point. Well,
I'm going to make it easy for you.
No, well, notice this. Each time we've seen a cyclical peak, every single time, the market, Bitcoin is rallied to just above a base power of 10 and backed off. So it got a little bit above 10 here where my mouse cursor is, it backed off. It got above 100, it backed off. It got up to 1,000, it backed off. It got up to 10,000, it backed off. It never quite reached 100,000. We're there now. So I think between now and I hear the music, we're going to get a little bit higher, and that'll be it. Okay.
Buddy, thanks a lot. We'll have you on soon. Tell the princess I said hello, buddy.
I shall.
Stan Harley, folks. We'll see you all tomorrow. May God bless.